with today's inflation rates, a lot of retirees, people who thought, I think you've had a lot of people retire in the past 2, 3 years because their portfolios have done so well, right? If you owned assets, whether real estate, whether equities, or even bonds, you've obviously had a pretty monster 2 or 3 years. When you look at, household net worth in the United States, it's increased by something like $35 trillion in the past couple of years. And so, yeah, maybe you were 62, 63, you were thinking, oh, I'll retire when I'm 65, 66. Oh, but I got all this money, I can retire now. I don't particularly like my job. Boom, let's retire. So I think you've had a lot of that happening. And then all of a sudden, the cost of living goes through the roof. And so you thought you had all this money, but you were probably assuming 2 or 3% inflation rates. And meanwhile, the inflation rate, the official one's 8.5%. But let's face it, if you're trying to live a nice lifestyle, and I first wrote this in my first book, it's never been so expensive to be rich, and it's only getting worse. Like, the inflation rate, the richer you are, the higher the inflation rate gets. And so, if you're trying to live a nice retired lifestyle, all of a sudden you're finding out, oh, maybe I should go back to work for a few years. So there might indeed be a lot of that coming up, where people in their 60s just come back in because of the rising cost of expenses.
So one of the things I wanted to ask you, so I mean, if we're going to have 2.5% unemployment, which I think is the lowest since the 50s or 60s.
Yeah, it's hard to go lower, right? Because you have a percentage of the population that's not employable.
I mean, if you look at the Fed funds curve, we're pricing in about 8 additional hikes from where we are today. I mean, I don't know. It's lunacy to think that we are currently at 3.5% unemployment and we're going to 2.5%, and rates are currently 25 basis points right now. I actually heard today that Jim Bullard said that he would not rule out a 75 basis point hike. So I think the Fed has realized their error and they're trying to catch up, but really they're 2.5 years behind.
Yeah, well, it'd be hard not to realize your error, right? When you've got 8.5% inflation rate, it's sort of staring you in the face. Having said that, my go-to line on this has been that the Fed is. I know you don't have kids, but you probably remember this from when you were a kid. You're driving and you're wreaking havoc in the backseat of your car with your siblings and fighting, etc. And your father says, you know what? If you kids don't behave, I'm going to pull over the car and drop you off on the side of the road. Obviously, the father has no intention of pulling over the car or dropping the kids off on the side of the road. To me, that's the Fed today. They talk a big game. If you guys don't cut it out, I'm going to pull over the car and you're going to see what you're going to see. But meanwhile, they never pull over the car. And, and so they talk a big game, partly because if you're the Fed for the past 15 years or so, talk has often been enough. They lived in a world where they talked and the market did what they wanted the market to do. The problem is, indeed, this no longer works because we are now full on in an inflationary mindset. And I think you've written a lot about this, and I think you're absolutely right. There's a psychological element to inflation, and once that sets in, once businesses move from just in time to just in case, once people start stockpiling, etc., the mindset has changed, and it's changed more or less everywhere around the world. Partly because we have an underlying energy crisis, and you could say, well, the Fed can't do much about that, and partly because we have deglobalization, and perhaps the Fed can't do much about that. But the Fed benefited from these trends for 20 or 30 years, and instead of making sure they kept ammunition in the closet, they just went on a party, and it's like QE2, QE3. Let's get this party going. Let's make sure the party keeps on going, etc. And so now they come in at a time with high inflation and a completely empty closet. And look, if I told you a year ago inflation will be 8.5% and the Fed will still be doing 10 billion of QE every week, you'd have said, Louis, what are you smoking? It's either or. But up until 3 weeks ago, that's where we were. right? Where they were still
Yeah.
doing 10 billion of QE up until 3 or 4 weeks ago. So, so I think the Fed talks a big game. The reality is their ability to get in front of the inflation curve isn't there. And so, and this goes back to the energy thing, is if you look at every bull market, if you look at every economic expansion, when they die, and you see the body on the floor and there's a knife planted in the back, the knife has either been higher interest rates or higher energy prices. I mean, that's what kills your bull markets. That's what kills your economic expansions. And I've argued for the past couple of years that the Fed is so far behind the curve that this time around it can't be interest rates. They can never get in front of the curve. Like that train is gone, and you know they can say we'll hike interest rates 75 basis points. Meanwhile, inflation's already up 100, so that you're still further than from where you were a month ago. Um, what will kill this bull market is not interest rates. What will kill this bull market is energy. And the only question is how high does energy go before the system cracks? And so that's why I've argued for the past couple of years, the ultimate diversification for portfolios no longer is bonds, forget bonds. The ultimate diversification for portfolios today is energy. Because the risk is energy prices go up so high that it kills your growth. That's what you have to worry about.
It's a really complicated world out there. We've got massive inflation, recession fears, war in Europe, COVID, China issues. What the hell's happening? Everyone's got an opinion, but who's right, who's wrong? As co-founder of Real Vision, I've got my own view, but maybe I'm wrong too. And I want to go and find out more from real experts, real in-depth analysis. And I've hand-chosen my experts for this 2-week journey of discovery in global recession. Is everyone wrong? I've chosen people like Peter Zeihan to talk to him about geopolitics, David Rosenberg about the economy, and Pierre Andran, the world's most famous energy trader, about how to navigate the oil markets and where it's all going. This starts on May the 2nd, and I'm going to learn so much about what really is going on and how to best navigate it. Yes, not everybody's going to be saying the same thing, but it's going to allow me to piece together an investment framework to navigate these complicated times. Now, normally we'd give you a 7-day trial for $1, but because this is so important for all of you, and I think it's one of the most important pieces of content we've ever done, we're extending that free trial for 2 weeks for $1. So you get the entire campaign of all of these great minds. And it's only $1 for all of this. So just go to realvision.com/global recession to find out more and join me as I try and figure out what the hell's going on.